conditions can grow into a flourishing tree of economic opportunity. A profound quote from Mr. Fazl Hassan Abe, the visionary founder of the Bangladesh Rehabilitation Assistance Committee.
Give a man a fish, he'll eat for a day. Give a woman microcredit, she, her husband, her children, and her extended family will eat for a lifetime. Another insightful quote from an African women's community. And with this, we welcome you to the 9th Eastern India Microfinance Summit 2025. I am Aloka from Equifax, and this is my co-host Samarpan from AMFI-WB Bengal. And we are honored to serve as your MCs today, guiding you through today's program of discussions, demonstrations, and visionary presentations themed on microfinance, paving the way to a $5 trillion economy through the empowerment of women entrepreneurs and financial inclusion. This event is organized by AMFI-WB Bengal in association with Sa-Dhan and MFIN. Knowledge partner, Equifax. Research partner, M2I. Technology partner, Nelito Systems Private Limited. Principal sponsors, Arohan Financial Services Limited, Credit Access Grameen Limited, NABARD, SIDBI. Co-sponsors, ESAF Small Finance Bank, Muthoot Microfin Limited, Satin Credit Care Network Limited. Associate sponsors, ICA Health, Bandhan Bank, Finheart, Jeevan Utthan Financial Services Private Limited, M-Swasth Solutions Private Limited, L&T Financial Services, Vector Finance Private Limited. Designed by Pixel Solutions and event partnered by VoiceWorks.
We would now like to begin the event with the traditional lamp lighting ceremony. We'd like to call upon Shri Ajit Kumar Maity, Chairperson AMFI-WB and Founder Village Financial Services, Shri Shekhar Ghosh, Founder Bandhan Bank, Dr.Alok Mishra, CEO and Director MFIN, Shri Gigi Mamin, Executive Director Sa-Dhan, Shri Avirup Sarkar, Chairman. He is the Chairman of the 4th State Finance Commission of West Bengal, the Chairman of West Bengal Infrastructure Development Finance Corporation, Vice Chairman of West Bengal Industrial Development Corporation, a member of the West Bengal State Planning Board, and a past member of Group of Advisors to the Union Finance Minister on G20 affairs. I would also like to call upon Dr. Sudeep Kumar Sinha, Secretary and Nodal Officer, Government of West Bengal, Shri Dharmendra Ramjibhai Bagada, DGM, Department of Supervision, RBI, Shri P.K. Bharadwaj, CGM, NABARD, Shri Sanatan Mishra, GM, Network 2, State Bank of India, Shri Saurabh Bajpai, DGM, SIDBI, Shri Partho Pratim Sengupta, MD and CEO, Bandhan Bank, Shri George John, Executive Director, ESAP Small Finance Bank, Shri Manoj Nambiar, MD, Arohan Financial Services, Shri Sadab Sai, MD, Muthoot Microfin, Shri Aditya Chatterjee, MD, Equifax.
शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शत्रुबुद्धिविनाशाय दीपज्योति कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः.
Okay, I would request all esteemed guests to please stand up for the national anthem.
जन गण मन अधिनायक जय हे भारत भाग्य विधाता. पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा. विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा. तव शुभ नामे जागे तव शुभ आशीष मांगे. गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता. जय हे जय हे जय हे जय 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 हे.
It is always great to start any event with the national anthem, right? So now we are going to move on with the inaugural session, and I would like to call upon the following speakers. First, Shri Ajit Kumar Maity, AMFI-WB Chairperson. Okay. Shri Chandra Ghosh, Founder Bandhan Bank. Dr.Alok Mishra, CEO and Director AMFIN. Shri Sanatan Mishra, GM, Network 2, State Bank of India. Shri G.G. Maman, Executive Director Sa-Dhan. Shri Avirup Sarkar, Chairman, West Bengal Infrastructure Development Finance Corporation and West Bengal Small Industries Development Corporation. Shri Sudeep Kumar Sinha, Secretary and Nodal Officer, IAS, Government of West Bengal. Shri Dharmendra Ramjibhai Bagada, DGM, Department of Supervision, RBI, Mumbai. Shri P.K. Bharadwaj, CGM, NABARD. I please request all the speakers to come upon the stage and take their respective places. Okay, I will request Shri Ajit Kumar Maity to please come upon the podium and speak a few lines to begin the program. So you can speak. Okay, okay. Yeah. Okay, sir.
Very good morning. Happy New Year. We are happy to announce here that today is the 9th Eastern India Microfinance Summit, and we have got enormous response from different organizations, and we are having here most renowned and respectable guests and speakers. Also, we have here the audience and participants from different organizations. I welcome all of them here. I cannot name all the dignitaries, but some of them I like to mention here. Mr. Chandra, Ghosh, Founder Bandhan Bank. Dr.Alok Misra, CEO, MFIN, Shri G.G. Maman, ED, Sa-Dhan, Mr. Avirup Sarkar, Chairman, West Bengal Infrastructure Development Finance Corporation, West Bengal, Dr. Kumar, Secretary and Nodal Officer, Shri P.K. Bharadwaj, CGM NABARD, Shri Dharmendra, Ramjibhai Bagada, his DGM, Department of Supervision, RBI, Mumbai. Shri Sanatan Mishra, GM Network 2, State Bank of India. And we have Shri Partha Pratip Sen Gupta, is the MD CEO of Bandhan Bank. George John, Executive Director, ISEP, Small Finance Bank. Mr. Manoj Rambiar, MD, Arohan Financial Services, and Shri Sadab Said, MD, Muthoot Finance, and so on. I welcome all of them, but in the dais, in the first session, we cannot accommodate all due to the shortage of chairs and seats here. So, and this summit we have designed into 4 important sessions, speakers, moderators, and very expert in the respective fields so that everyone enrich themselves from these sessions. This is also a happy news that AMFI West Bengal has its own office and building in the nearby Rajarhat, which was possible by the major financial support of Mr. C.S. Ghosh. We will honor him today by honoring Mr. Chandra Shekhar Ghosh, founder of Bandhan Bank and member of AMFI West Bengal. I do not take much more time because so many speakers here, you will listen from them, but I like to highlight some points, a few points, which I should say to consider. One is we need, for the development and promoting this microfinance sector, we need some points which require to solve. Apex financial institutions like SIDBI and NABARD need further enhance equity and loan support to the MFIs, particularly to the smaller ones. Investment in credit education needs to be enhanced to increase productivity of their business and enable them to take advantage of the available opportunities. The government should further increase the funding and liquidity support to the sector, particularly the smaller and medium-sized MFIs, like continuation of credit guarantee scheme for another 2 years at least. Apex financial institutions like SIDBI, NABARD and Mudra need to further enhance equity loan and long-term subordinate debt support to the MFIs, particularly the smaller ones in the line of IMEF fund as earmarked in earlier budget. More and more financial literacy workshops for clients to be organized so that they can embrace the digital transactions more freely. Capacity building support is also required. It is high time to the government to create a microfinance regulatory authority exclusively for regulating the microfinance sector. Creation of an autonomous finance corporation for MFIs that may address the problems of liquidity and small size MFIs. Creation of special window by the banks for funding of NBFC MFIs and special budgetary allocation for this purpose. Rating and grading agencies must formulate separate guidelines of rating or grading for small and medium-sized MFIs. There are much more points I don't like to mention here due to paucity of the time. So, I will stop here so that the other panelists, Lastly, AMFI West Bengal is implementing We Lead project in West Bengal and recently started in Jharkhand state and with the support of SIDBI. And today, from SIDBI, we will receive the sanction letter in this occasion, which is really boosting the microfinance sector by promoting entrepreneurship development to our microcredit borrowers. Lastly, I close my opening speech and thanking you all again here. Please.
Thank you, sir. Now we will request Shri Shekhar Ghosh, founder, Bandhan Bank, to please speak a few lines.
Respected all dignitaries in the dais, all the delegates and colleagues from the industry. This is our great pleasure at the moment. The 9th, the Eastern India Microfinance Summit is organized by AMFI, which I am the part of that. I feel proud in the moment. Many of the senior, the people who are very earlier also involved in microfinance, they are also given their time to attend in here. So thank you to all of you. Of course, we will be not only that the AMFI role, whatever we are playing, along with the MFIN and Sa-Dhan, and both the representative are in here, and it has been enriched. The total program is very big. Many way we are talking about it. Today I am talking in another way on that to all. The 8 crores family we reached as a country, 40 crores the population, 4 lakh crores as a outstanding, all are 4. Maybe very soon we'll be reached to the 5 in the all respect. But my point is not in here. I am not talking about the objective of the microcredit in the figure. The total objective of the microcredit, transformation of the life of the poor people. What we are like to go when the figure is coming and we are missing the original objective of microcredit. What we are reach to the people to change their life, transform their life. If we look on that to the field, you are know very well on that, and lots of life we have been changed, we transformed. Lots of people's income increase, and those level of the people proved in all of our eyes, they are the best entrepreneur in the country, and they created lots of job for the country, which is not counted anywhere. So I am requesting on that this forum to all the dignitaries and my people we are working together, will be like to shift our mind again from the figure to impact. what we have been changed the life of the people. That will be like to many of the challenges we can be solved on that. Next, my point on that, of course, microfinance is working with the people. They are neglected. So we also will be neglected. That is not a problem. As a microfinance industry, as a microfinance player, we will be neglected because we are working with the neglected people. How we can be like to prove it? So those people are not neglected. How much economy are contributed those people, which we are built up on that. Then everything will be like to change of the country on that. Of course, there is a lot of challenges we faced in the last 30 years, no doubt. And every challenges, we are scared, we are feel that maybe we are finished. But every challenges we are overcome. And we learned new, and we are going forward better way. So in that sense, I feel that all of us, we should be take confidence, keep the confidence on us and drive from the learning and correct it and then go ahead of the future. So that our people lives change, people lives we have not missed. And they are contributed to the country, and country also once upon a time give this the value is a more. Yes, another thing is a country is big. There is a big opportunities of the country. But how we can be reach the more and scale. Scale is a two part. One part is a number of the people to reach. Another is a amount. The people are changing the life, their business is increasing, economy is a change, GDP is growing, so that automatically their finance amount also like to change, improve. So that will be also gradually can be like to reach on that. So this is the two things is a big opportunity in India country because of the 145 crores of the population and the major part 70% in rural and microcredit only the channel we are pushing the money to the rural. So rural economy helping more to grow up on that. What are the challenges? We know that internal. I am saying that the external challenge. There is a three things we are talking about it on that. One point, the challenge we are saying that is an over-indebtedness. Everywhere saying that money is giving more, this is. What is the exact tools we are using to assess that over-indebtedness or real the funding we are given to these people? Should be like to look on that. As per my experience on this industry, the people say that as a bank, I have been also learned a lot of words, credit underwriting. When I was in a microcredit, I am not understand about the credit underwriting. So when the bank, I know the bank credit underwriting. What is the credit underwriting of microcredit? The first credit underwriting of microcredit, group meeting weekly, attendance in the customer, stop, spend the time in the group meeting, see, look, talk, understand what is their capacity to run the business and how much I can be like to give. And this is a best way, whatever we lost in the time of pandemic, we'll be like to recover it on that. This is the best credit underwriting. Of course, we have a need, the data support, it will be strengthened more. If you see, before this, the data analysis, credit growth, credit quality was in a better because the group meeting attendance is a must. Staff are spending the 1 hour time in the group meeting. credit quality is good. When it's a more are coming for digital, it is a little bit is shifted from that credit underwriting to the another way credit underwriting, and that credit underwriting is not fit totally with the microfinance. So we'll be like to request on that if you can be mixed the group meeting attendance and the staff, and the staff will be like to give more time in the group meeting, talk with the borrowers, relation build up on that. That is the best way credit underwriting will be helped us to recover on that better way. And of course, it will be like to help us in depthness will be like to come real matter on that. Second part on that, the credit underwriting, if you recall on that all the people, the very important another tools is in financial literacy. Before the group are eligible to get the fund, 2 weeks earlier practice, we are given the education to the borrowers. What are the loan, what are the condition, terms and condition, how can utilize, how we like to pay. This is called that the financial literacy. We hope that we are doing it, but we should be like to strengthen this financial literacy more and then going to the credit, not in a immediate credit after the admission of the member. That will be like to better way we can be strengthening the credit underwriting of microcredit. And next up, another point on that, we are growing more, but we have a need on that to develop the skill of the employees. When we think about the employee skill, how much we are given internally trained them, and how much we spend for that. As per my earlier calculation, if it is a small, they are 20% are spent their expenditure for training of the staff. If you are big, 10%. You can think about it to allocate on this type of fund for development of the staff, and continuous need to give the support how they can be handle the group meeting. How can they assess the customers, how much is the need on that, and give this the experience of how they will be like to go to understand about it, the customer utilize the money on that. And that also helped in our industry as a credit underwriting is better. Next, another point, I feel that everyone talking about the risk. Of course, from the beginning of the industry, we are listen from the people, or people mandate to us on that we are unsecured. A lot of debate I have been given on that. Is it unsecured or it isn't secured? I feel that the group bonding will be given to us, group liabilities, and automatically it will be helped us to create a that is a secured loan. Of course, I say that we should be like to rethink the model of microfinance after the last 30 years. Model will be like to think in a two line, which I feel that is needed. First, the how it can be scalable and sustainable. Because we are but when you like to think the scale, and immediately we are faced all our challenge on that. So scalable and sustainable is the main head. Is a couple of things we can be like to look on that. The first looking on that, scale is the market is big, no doubt. If I like to scale, we have need to diversify the product and services. Not only microcredit is a challenge today's situation. So that will be like to look on that, how we can be diversify within this objective, within this the regulation, how we can do it on that. Second point on that, we should be diversify our source of funding. Will be now, earlier, if you say practice on that, only we are dependent on bank. If one bank say that no, automatically spread, others say that no. So how we can go to the other of this, the bond? No, you can think about it on that, how we can diversify the funding source. So lending also will be diversified and source of funding also will be diversified. And both will be helped us to sustainability is a better way and scale also coming in better way. And the third my point on that, the industry people is here who are the Alok and Ajit. We suggested on that every frequent we have need some impact study, some geography, and frequently circulate to the all policy makers, opinion leaders, and very big way. This is our big job. We hope that it can be helped us to change the mind about this, the sector. And of course, another part they are doing it, which is in that the continuously touch with that, with the regulatory reform, how we advocate it. When any industry are smoothly running, we are not feel about it. When the challenges come, then we go. Then people are not like to listen us. So we should be like to good time also go in there. And then it will be like to understand what they are feel about it. So then suddenly would be not like to come any bad things. So this is my second point of the risk point of view, if we can be relook on that. Third point, everyone know that, interest rate, and that is also need on that advocacy, and it is also need for that we can explain how we are calculate on that, and this is not the perception, it is an calculation. So we should be like to educate all the people the how we calculate and why it is needed on that. But this is not in a perception, it is a high. The many times people will say that 1 kg potato and 100 kg potato are not the same price, because it's not the same cost. Who will be like to educate to the people, and the platform, all will be like to do it on that. That will be like to very helpful for the industry. Finally, we will be like to think is microcredit is not profit oriented, it's a people oriented. We should be like to relook our objective, relook our looking, relook how we can be talk with the people on that. Not the number, not the profit. We are like to do what is the change of the life of the people and how much employment we are created on that. As a big opportunities for us, of course the challenge will be there, but do not worry about it. Whatever the challenge we overcome and now also overcome, need all of your strength. Thank you to all of you given these opportunities to talk. Namaskar.
I will take a moment to welcome Mrs. Nilima Ghosh. She is also present here among us. And now I will move on to our next speaker. I will request Shri Sanatan Mishra, GM Network 2, State Bank of India, to please speak a few lines.
Thank you. Respected dignitaries on dais, distinguished participants. At the outset, I would like to thank MP to give me this opportunity to come and share my thoughts. I'd really appreciate the timing of the MP, because this is the time, as from the side of the kind of outsider to the industry, I can tell that this is the time, this is the most challenging time as we see for the industry. And this is the time all the stakeholders rightly have come together, and I wish that lots of good things will come out of this summit during the panel discussion, and going forward those things will become the actionable for the industry. I would like to place my request to all the panel participants that the discussion, whenever it is going on, it should come out as actionable and it should be understandable to the parties like us, external people also. When I say external, we also are participant to this industry, but as far as MFI is concerned, we also find that a little bit of course correction is required. When I say course correction, I do not mean that the way we were moving was not correct, but circumstances have changed, and like any industry, we also need to change as per the times. So with that, I'll come back to the theme of the 9th edition, microfinance on the path of part to 5 trillion economy for women entrepreneurship and financial empowerment. What I understand from this financial empowerment of women is that it is empowering, equipping women with the resources, with the knowledge, and with the confidence. This already has been the goal of the industry. MFI has played a great role. Probably, if we talk of economic empowerment among all financial players, MFI in this country, they have played the biggest role in empowering the women by way of various steps. That is the model, that was the gap, and that gap has been filled. At this juncture, we also know that a great opportunity and great gap exists, and from the side of the bank, we also are very much sanguine to the fact that lot many needs to be done in this direction. So, microfinance has significantly given economic independence of the underserved women. Access to credit has enabled women to start and expand businesses, leading to the increased income and financial autonomy. These women have been empowered socially. We have seen, we have felt that participation in SSGs and access to financial resources have enhanced their decision-making power both inside the household as well as in the community. MF has helped in improving living standards, loans for education, healthcare, and housing. Probably it used to be sort of unthought of earlier, have led to better quality of life for them and their families. The economic landscape of India, as we know, is poised for unprecedented growth, with GDP almost expanding at average twice of the global rate. But we all know that the RUSU, the rural and semi-urban, has to be participant to this growth. So with 70% of population is still till date, almost 20-25%, not more than 25% of the credit is going to these areas. And here we know that the importance of this area and the participants are very, very important if we really want to achieve our goal of $5 trillion economy. If we consider the MF industry data, if we see the data, sirs, the percentage gives some other picture. The growth has been very good. So if 23-24, as you all know, that MF industry has grown 24.5%, which is a reasonable, healthy growth. And the role, we are still MFI, microfinance is 6th largest retail lending segment in our country. Is still the biggest source of capital, as I was saying, creation at the bottom of the social pyramid. And also involvement of large corporates. It shows both the things, potential as well as the importance of the sector. If we see the by September, if we see in the state of West Bengal, the almost 1.32 crore loan accounts were there, of which majority of loan accounts are with banks and NBFC MFIs. So almost 85-86% of the MFI industry still is catered to by the banks and MFIs. There are other players also. As far as SBI is concerned, we see a great opportunity in this sector, and that remains. We had seen, and it still remains. We have full faith in this sector. The sector holds a strong position. Why? As Ghosh sir was saying, that not only we have to see the financial return on investment, but social return on investment is very high in this sector, and whatever money is deployed to this sector, this industry reaches out to vast number of underserved people, and traceable livelihood is created. We strongly believe that this is a profitable investment opportunity also for the banks and other financial investors, alongside serving our social obligation. So what happens that this industry, this sector has always been a kind of doldrum. So one look is that, is it purely a developmental industry? It is only for social goal? It is only for social development? Or it's a kind of, it has to go along with the commercial success also. Now this is a kind of very challenging thing, and I am sure that while panel discussion takes place, some kind of synergy comes out. Because I would like to humbly place that if we keep it purely a social goal, there is a risk of being considered as a charitable activity, which will not be good for the industry. We strongly believe that a win-win formula between FFIs and banks, which will result for the bank, it has helped in creation of loan book, it has resulted in business development, it has given us a great help by way of our extended arm in follow-up and recovery, still a lower NPA rate, and it also has very pragmatically helped us in achieving our priority sector targets. So for us, the value was there, value remains. So far as our partnership is concerned, if we take state of West Bengal, the area I am coming from, SBI, State Bank of India, Kolkata circle, which comprises of state of West Bengal, Sikkim and Andaman and Nicobar Islands. We have a dedicated specialized branch for MFI over here, which for special thrust to MFI sector. Pan India, our bank has extended finance to 35 FFIs with a loan portfolio for approximately 5,000 crore, of which West Bengal alone, out of these 35, 15 MFIs with a gross portfolio of 360 crore in terms of bulk lending and co-lending to SHGs. Further, under direct assignment route in the state of West Bengal, we have extended facilities to the tune of 1,500 crore and approximately 7,700 crore pan India. At present, we are extending support, as you know, to this sector by way of direct financing model of SHGs, then bulk lending to MFIs for on lending to SHGs, JLG individuals, direct assignment route by purchase of free pools, co-lending model is there, where risk and reward is shared between bank and originator. The potency of microfinance, however, hinges on the synergy between the government initiatives and the efforts of MFIs. This holds the promise of delivering a substantial impact by alleviating the challenges faced by the impoverished of our society. One such challenge, as it was earlier pointed out, pertains to the scarcity of funds that impacts the growth of the microfinance industry. So we all understand that unless there is adequate fund, our dreams, our aims will not be fulfilled. To surmount this hurdle, microfinance institutions, as Ghosh sir was saying, should explore alternative avenues for funding for their sustained growth. Some challenges, as we see at present, are maintaining a delicate balance between, as I was saying, that financial sustainability and serving the most vulnerable, and again what should be the right interest rate to support this, the institution, keep it sustainable, without burdening the borrowers with excessive repayment remains a critical concern. This sector, as we had felt during COVID-19, that the volatility is a big challenge, economic volatility, which can impact borrowers' ability to repay and the stability of microfinance institutions. Another challenge what we see stems from the diverse and often complex socio-economic landscape of India. So, in this sector, implementing a uniform guideline across the country is a challenge. It poses a challenge because we have got different cultural and geographical needs, and even the society is, as far as financial habits also concerned, are different in different geography. So we should be aware of that and move forward. Furthermore, ensuring responsible lending and preventing over-indebtedness among borrowers require robust credit assessment mechanism and financial literacy initiatives. So the user, the borrower, the most important thing for us is that level of engagement. Engagement with the borrower is the key. Engagement of the borrower not only ensures their financial literacy, but also ensures the financial discipline. There has been and there will be regulatory steps. This cannot be avoided. Only way for the industry is that to actively engage with the regulators and put forth the point, put forth the real situation, put forth the pragmatic suggestions that how the industry works. This is the reality, and this convincingly can only be done if the engagement of the industry is higher with the borrowers. So I would like to conclude with the one thing, that there is no doubt that all the stakeholders agree on one point, and that one point, as I said, is that there is need and immense scope in this industry. There is no alternative to this industry. This will go on. Only question is how to go forward. The development of microfinance has been in the past also, if we see, characterized by experimentation, difficulties, and still sector continues to grow. So as far as our West Bengal state is concerned, microfinance institutions play a transformative role in empowering women by providing access to financial resources, fostering entrepreneurship, while challenges remain. A combination of financial services, capacity building initiatives, and supportive policies can unlock the full potential of women, and that way we can fulfill our dream of 5 trillion economy, leading to a more inclusive and prosperous society. I wish this summit a great success. Thank you.
Thank you very much, sir. It was quite encouraging to hear you talk about the growth in the MFI industries, despite what numbers might say. And also it was great to hear you talk about the win-win formula between MFIs and banks. Sir has a sudden work exigency, because of which sir would have to leave early and not be able to stay with us for the rest of the event. So I request Shri Ganesh Chandra Modak, MD of Grameen Shakti, to kindly present sir with a token of our love and appreciation. Thank you, sir. We have two special members who've joined us a few minutes back. So before we move on to the next speaker, we would like to extend a warm welcome to Shri Partho Pratim Sengupta, MD and CEO Bandhan Bank. Thank you, sir. And Shri Srimati Orpita Sen, Senior Vice President and Head FIG, Healthcare and Education, Bandhan Bank. Thank you very much for joining us here today. I now call upon our next speaker, Shri P.K. Bharadwaj, CGM NABARD.
A very good morning to all of you, esteemed guests and dignitaries on the dais, all the senior participants here and stakeholders and the interest holders in this AMFI meet being organized today. A very happy new year also to all of you. It is a privilege for me to be here in this event, which is a very holy land of Gurudev Rabindranath Tagore ji and Netaji Subhash Chandra Bose. It is a privilege. Also, it is a privilege to be in the company of the dignitaries who have the vast experience and who have contributed in the growth of microfinance sector. Ghosh, sir, he has already underlined this microfinance sector is not for financial gains, it is for social gains and it is for growth of the society at large. The people who have been neglected, who don't have access to the capital, the objective, primary objective of the microfinance players is to enable them grow and have a better living standard. So that is the guiding post for all the activities which are to be envisaged and the way we move forward. So that is the primary guidance tool. So one thing is the stakeholders, important stakeholders have recognized the need that this sector needs to be developed in a very healthy way. The government has a vision that all these people who are living in a very minimal standards of life, they need to be developed, and finance is the tool for enabling them grow and aspire for a better living standard. So NRLM, SRLM's kind of setup has been envisaged and created and now working across the country. RBI, the regulator, in the role of regulator of financial sector, has established certain guideposts so that the sector and the players exercise all the wisdom and ensure healthy growth with kind of best practices so that the poor people get access to finance at a reasonable cost and with transparency and efficiency. NABARD, SIDBI have been able to facilitating capacity building, extending refinance support to the players so that the resources are available for the people to get financial access to finance at reasonable cost. MFIs have played their role in terms of reaching at the ground level where earlier the commercial banks and existing players were not able to reach. They have been able to reach to the ground level and reach to the unreached people where the finance was not getting available. Our senior from NABARD, Shri G.G. Memanji, he is here. He has spent a big time in NABARD, and then after NABARD he has been associated in Mudra, and now he is in Sa-Dhan. So it is a privilege for me to be in his company, and the way SROs are contributing for healthy growth and guiding all the players, what are the best practices, and then undertaking policy advocacy with the regulators helps in healthy growth of the sector as a whole. NABARD initiated the microcredit initiative through SHG Bank linkage program almost 3 decades ago, starting with some 500 SHGs, showing that the people, when they come together, they are bankable, they are reliable, and they are able to repay also. They have established themselves, the small players established themselves under the social obligation kind of understanding that whatever they borrow, they make use of the loan or credit in a rightful way and are able to repay the loans also as per the terms and conditions of credit which are envisaged by the. And I compliment Ghosh sir for being recognized today by AMFI in today's program. NABARD has taken few initiatives for the microfinance sector. Gender equality is one of the major contributions of microfinance. We are able to involve the females by giving them first the knowledge, then enabling them to avail credit, and then they take some economic activities and contribute to the growth of their family income and living standards. So, I would like to share some of the activities of NABARD in this regard. NABARD is extending grant support to the partner agencies for promotion and nurturing of self-help groups. There is a scheme for promotion of women SSGs in backward and LWA districts. We have promoted the concept of JLGs, and we extend the help for formation of JLGs. Then we also extend support for Micro Enterprises Development Program, MEDP, which impart them skills for undertaking the economic activities. Similarly, we also help in organizing LEDP programs for the beneficiaries, so they are able to take some skill upgradations with the help of these advanced people, organizations who impart them knowledge and skills to undertake the economic activities for their working. Now, also there is a scheme for grant support to SHGs, JLGs, and micro entrepreneurs for training and onboarding to e-commerce platforms, ONDC, social media platforms, etc., so that these entrepreneurs get some opportunities to market their products. Then we are also facilitating by extending grant support to SHGs, JLGs for physical marketing of their products by way of setting up of gram dukans, movable carts, stalls, and some outlets at railway stations and other such vantage points. NABARD has also taken a pilot project with Bandhan Bank. Bandhan Konagar, the CSR arm of Bandhan Bank, is associated in implementing a project at 5 districts across 5 states: Madhya Pradesh, Maharashtra, Odisha, Jharkhand, and Meghalaya. And we'll be using the tried and Bandhan Bank will be using the tried and evidence-based targeting the hardcore work tools with intensive handholding over a period of 2.5 years. We are associated with Bandhan Bank in implementing this project. Then we also extend refinance support to MFIs as per the policies laid down by the Reserve Bank of India and as per the prudential norms of NABARD management. Now, I would like to say that microfinance is the same, the sector needs, it has a lot of potential if we consider the overall size of our country, both in terms of numbers and in terms of financial requirements and in terms of our aspirations, as we intend to become a 5 trillion economy. So there is scope and there is space for everybody. So what is needed is we have to ensure, as together we have to collaborate and find out how do we extend the right amount of credit to the needy people at the right time and at the right cost. So this is the kind of expectation and this is the kind of challenge for all the stakeholders, and we have to meet this expectation in a responsible way. So the entrepreneurs at grassroots level need to be trained, and they need to be made financially literate about the need for credit and the rightful use of the credit. Once they avail credit, it should not be for consumption purpose. Primarily, it should be for some productive purpose so that they generate some additional income and are able to achieve better living standards. So that is the primary and sole objective guiding all the activities. So that will only help in strengthening the poor people, and that will only enable us to achieve the Prime Minister's saying that Sabka Saath or Sabka Vikas. And that is how we will be able to take them along, and ultimately we will be able to claim that we are an economy with all the stakeholders growing. After all, a chain is as strong as the weakest link, and we want to strengthen them, and only then we can claim we are a developed economy with responsible social growth. So I am sure with today's deliberations, the stakeholders will put their minds together to find new ways of helping the poor people in achieving a better living standard in days to come, and will contribute to the fullest together. And together, I'm sure, together we can do, together we will. Thank you so much.
Thank you, sir, for your valuable insights. I would like to take a moment to welcome all the bank dignitaries who are present among us today, and I would also like to thank them to grace this occasion. Now I will move on to our next speaker. I would like to invite Shri Avirup Sarkar, Chairman, West Bengal Infrastructure Development Finance Corporation, to speak a few words.
Thank you very much for giving me this opportunity to speak here. There are lots of dignitaries on the stage as well as in the audience. In more than one sense, I'm an outsider to this. I am neither a banker nor attached to any microfinance institution. My real identity is that of an academics. I've taught and researched for almost 40 years now, more than 40 years actually, at the Indian Statistical Institute. That's my real identity. Now, what I'll do is, I will talk a little bit about microfinance institutions from the point of view of the users, from the point of view of the society. It won't be from the point of view of the practitioners or from the point of view of the institutions. It will be from the point of view of the society, and basically we will ask one fundamental question. Why do we need MFIs? What good are they doing to us? Now, this question, I will try to answer this question in two parts. First, I will try to figure out, based on our own research, I have taken a number of projects. I took two projects, both funded by the London School of Economics in 2016 to 2020. And based on that research, first, I will try to figure out what role MFIs have been performing. Of course, my research was limited to West Bengal, but I think it can be easily, it could be generalized to other regions as well. So this is the first part. The second part, I will try to argue that the role performed by MFIs cannot be performed by other financial institutions, namely banks, local money lenders, and, which is most close to MFIs, self-help groups. So, this could be all well known to you, but let me just go through this. Now, we know that MFIs provide small loans to the underprivileged, mostly women, and they don't need any collateral. These small borrowers cannot offer collaterals. So that's the kind of loan that you are giving, and repayment rate is very, very high. And it's often to groups. I'll be talking about groups, though I understand that group lending is on the decline, but I will be talking about groups. Groups, and often with joint liability. Now, there is very careful monitoring, and the high repayment rate comes from that. Very careful monitoring and high interest. High interest comes partly from high monitoring costs and partly from high borrowing costs by the MFIs. MFIs do not have, they cannot take deposits. So they have to borrow from banks where interest rates are much higher. So these are all well known. What do MFIs do with this small lending? I can identify 4 major areas where MFIs have played very important roles. First is, of course, financial independence of women coming from own earned income. So we are talking about, women of backward stretches of society who never thought that they could earn on their own, they could have an independent income, and now they have their small business, they can earn, they can pay back. So paying back is also very, very important for them. That gives them a lot of confidence. So first is financial independence. Second, this financial independence leads to social empowerment. We have been talking about empowerment all through, but these empowerments come in small but very important ways, like taking decisions within the family. Now the person who is taking loan and is able to pay back has her small business. Now she can decide what to buy, what to eat, whether to send one's kids to school, which school, and so on. So these are very important family decisions that the woman can take, who has been empowered, who has taken a loan, who is now financially independent. So this is the second thing. Third, I think it's very important, at least our research showed that it's very important, is the formation of social capital. Now, of course, once you are within a group, you get to know people, you become close to these people, and then if there is a crisis, you can get help from your group members. This help, this is a kind of insurance. One must understand that in rural areas, insurance is very difficult to get, formal insurance. Formal insurance is not available, one can say. So what we have is reciprocity in place of insurance. So within a group, people come together and they have reciprocal relationships, reciprocal social relationships. When I am in need of money, my group members can help me with the understanding that when someone else in the group needs money, I will help. This is reciprocity. And we have our research, through our research, we find out that on an average, groups have got money which is almost 5 times their income in a period of crisis. So this is insurance. This is very important. And finally, there is financial literacy. A woman who didn't know how things are working in the outside world, now she has her own income, now she can earn, she can spend, she can do all sorts of calculations, and that adds to her financial literacy. So this is the first part of the answer. These are the roles, these are the things that MFIs have achieved. Now the question is, what about other institutions? Can we have other institutions which could achieve these ends? First, banks. Of course, banks are not very good at these things. They cannot, they cannot undertake this high monitoring. With small loans, monitoring cost becomes very high, and their overheads are much higher than any average MFI. So banks cannot monitor, and therefore they cannot give very small loans. As a result, there is the exclusion of the underprivileged by banks from bank lending is high. Second, local money lenders. There, the interest rate is very high, comparable with MFI, what MFIs charge. But, local money lenders can reach a lot of people. They have local knowledge, but there is no empowerment. There is no group. There is no social capital building. There is no insurance. So it works on an individual basis, and it's not, local money lenders do not usually lend to women. Finally, we talk about self-help groups. They are the closest to MFIs, but the difference is that for a self-help group, first you have to build up a small savings, and then you get loans from the bank at much lower interest, of course. So the advantages that we mentioned for MFIs, financial independence, social empowerment, informal insurance, financial literacy, all these things are there for self-help groups. One has to admit that. However, our research showed that there are 2 hindrances. One is, of course, the initial savings. The group members have to come together and put together some money before they can take loans from the bank. So this initial savings, for a very poor person, for a very poor household, initial savings could be a hindrance. The second is more subtle. We found out that groups chosen by self-help groups, they are chosen by panchayats usually, and there, often they are politically motivated. Unfortunately, people you choose who will become a member of the group, that choice itself is not free from politics. Whereas if you consider an MFI, first of all, no initial savings are required, and also since interest rates are high, it's just market driven. There is no political favor that you have to provide, because you are paying high interest rates. You are getting, you are getting into a group. So the point is that MFIs are performing specific roles which other financial institutions cannot perform. So, the regulators, the government should be supporting the MFIs. That's clear. I will mention, before I finish, I will mention two shortcomings, I would say, or two points about which we should be careful. This is also our this is also we found out through our research. First is that, of course, there is financial literacy spread through groups, but also there is financial illiteracy, especially misinformation is spread about Ponzi schemes through groups. We found out that members belonging to MFIs are much more prone to Ponzi schemes than individuals. So one has to be very careful about what kind of information one is spreading. This is one. The other is that MFIs can of course empower, but in its present form, with small loans, it cannot, let us accept that, it cannot change the economic condition of a poor person fundamentally. It can of course empower, empowerment is very important, but for economic change, we need larger loans, we need broader economic development. So MFI as institutions, they are playing a very important role, but they have to be, they should coexist with broad economic development, with policies which support broad economic development. Thank you very much.
Thank you, sir. Now I would like to call upon the podium Dr.Alok Mishra, CEO and Director AMFIN, to please speak a few words.
A very good morning to everybody, distinguished dignitaries on the dais, my colleagues and delegates. Thanks to AMFI for inviting me here to speak here. Grateful for that. I think the session has got extended, I think already 25 minutes past and 3 more speakers are there. So I will not take much of a time. I will like to keep it brief and short for everybody so that we can have the tea break at time and next panel can also start. So I would, because in this hall I see there are 4 types of stakeholders. A regulator is there, funders and investors are there, regulated entities are there, and media is also there. So I would like to address few points to each and then close my remarks here. The industry which serves 8.5 crore borrowers, low income borrowers, and if you take each household members as 4, it's almost 30 crore of Indian population. The credit outstanding is 4 lakh crores, contributes 3% to India's GDP, and has given a consistent good asset quality of 98% recovery, and still gets flagged day in and day out. That needs to be addressed. Dada said that we have to do some research studies, prove our impact, go beyond numbers. We are already doing that, Dada. This year, by April, you will see we have commissioned a large-scale study by NCAR of 10,000 borrowers across 100 districts of India. But how much of that will change the perception, we do not know. In between, we hear in good times good pronouncements. Like last year when we were inaugurating our micro matters, macro view report, Amitabh Kant, the topmost public policy bureaucrat in India, he said that MFIs and institutions who are doing microfinance are institutions of national importance. He said because they are building inclusive India. But such statements are rare. More often than not, we get flack for doing good. So I think that I want to dispel with a few things for each of the entity. Now I will start with the regulator. I think with the support of the regulator, we have come this far. But in between, because of the nature of business we are in, there are certain times misgivings, and we need to address that. Because no other structure in India from regulated financial institution will give you a reach, reaching 723 districts, 8.1 crore clients at the doorstep without collateral in a regulated manner. and that reach is unparalleled and has to continue. And if you look at India's macro data, whether it is periodic labor force survey data or household consumption and expenditure survey data, the evidence of inequality and the growing need for microfinance is there. So there is no way, if the microfinance suffers, the dream of India becoming an inclusive society and marching towards a 5 trillion economy goal will not be achieved. We may grow at GDP at 8%, but the economy will not be inclusive, it will not be sustainable in the long run. So we have to keep that in mind. And this sector, despite serving an economy which is informal, difficult to estimate income, go to the doorstep, still with all sorts of regulations from the regulator as well as from the SRO, additional, going above the regulations. There is no other financial sector industry which goes beyond regulatory requirements. Here we are going far above that, and it delivers the service. So you should have some confidence on the sector and try to support it, because no other sector has an SRO which is so active, which goes beyond regulatory requirements. And on the interest rates, I think that has also been one of the major concerns on that. Interest rate, I would like to address that if we compare across secured lending, unsecured lending, the microfinance lending, the weighted average interest rate currently at 23.8% is the best in the class, globally as well as in India across any other sector. And we often hear in press and all that about profitability, charging higher rates and all that. So we did an analysis, and last 8.5 years data of top 15 NBFC MFIs. If I take small ones, it will go further down. Top 15 NBFC MFIs who are more profitable, their return on assets for 8.5 years were 2.1% only. Is that a very high profitability? And if I look at, you can Google it, last year ICICI Bank's return on asset was 1.9%. And that's secured business, corporate business. This is doorstep, totally unsecured business. So the sector needs to be given credit for that. And so for the regulator, my request is that kindly bear with us. Sometimes a little credit quality goes up and down, but the sector is well responsive to the needs of it. On lenders and investors, I would say, yes, your support has enabled us to go to 4 lakh crores, and it will enable us to go further. And it's a win-win thing. As Dada was saying, I would say that it's not only that we grow, you also grow, and with us, and you also fulfill your social mandate. Because in India, since 1969 nationalization of banking, the banks have a social mandate. And your social mandate, part of it, a major part of it, microfinance does it. So kindly support us. It is not a one-way street, it's a win-win street. And also don't shy away with little 2% or 3% rise in portfolio quality. Because today at 1 to 90 par, if I see of November, we are at 5.8%, it is not much. If you look at retail unsecured credit, if you look at other things, it is much higher. So even then the liquidity has dried up for the sector. I think that's not good, because in such situations, if liquidity dries up, it compounds the problem. So you have to keep the liquidity tap up, otherwise there will be further problems. And we would also say that tighter, even in further worse situation, because this is very, from 2% normal 1 to 90 days portfolio tricks, we have gone to 5 to 5.5%. But even COVID times, if you see where it had gone to 15%, even that time lenders and investors must draw comfort that not a single institution defaulted. So that comfort is there. Still with that comfort, if we raise that flag, I think that's not a, please keep your liquidity with a sensible approach open to the sector. And to the media, I would say the total financial sector in India, including banks and scheduled commercial banks and all that, is 170 lakh crore. And microfinance sector with all entities put together is 4 lakh crores. So hardly 2.5% of the entire financial sector. But the amount of attention which we get, that's disproportionate. Yes, we welcome attention, but kindly facts over fiction, facts over apprehension. Because right now, as I was sitting on the dais, I just see today's Economic Times first page is, I was just looking at it, some news item in Economic Times on small borrowers have hit 4 or more lenders. I am not sure, because if suppose out of 8 crore borrowers, if 4% have 4 or more lenders, is that a big thing? And that also has been curtailed by the SRO, it will come down over a period of time. So kindly we are always there to help you as an SRO. Our REs practitioners are also there. They will also help you. Kindly understand it and report based on fact. That is my request to the media. And finally, to my colleagues and members, regulated entities, yes, we are going through tough times, but I have faith in you that we will emerge out stronger. We will emerge out stronger, but we need to be very vigilant on being compliant with regulatory issues and SRO guidelines so that we don't give an iota of doubt to anybody. So that's all the 4 sectors which I wanted to say. It was, I think, I could have spoken more, but considering the paucity of time, I will stop here. And thank you all once again. Thank you very much.
Thank you, sir. Okay, so this brings us to the end of the first half of our inaugural session. So now I will request Shri Subrata Ghosh, MD Servitium, to please come and give our token of appreciation to the speakers.
Moderators and speakers, kindly come down for a group photo with Aditya Chatterjee. Request him to come, kindly come in front of the stage for a group photo. Another token of appreciation for Shri Ajit Kumar Maity, which has been crafted by one of our beneficiaries. So we would like to hand it over to you.
Poverty reduction. So what support I think we can expect, what is required is, definitely we always talk about the regulatory guidelines, that it should be the regulated, it should be the transparent, lending practices should be good. But somewhere I think there is also a need to incentivize the MFI sectors to the MFIs, because this is the sector, these are the organizations which are basically providing support or the last mile connect, and also like they are working in the tough geographies. And then the second one is, I would mention the sustainable growth and basically the stability. So there in fact I should, that the policy should encourage somewhere for innovation and diversification of the financial products. So innovation and technology support is definitely must, because like whenever we are talking about, okay, the rate of interest is high in the MFI sector. So there are two things like through which we can reduce the rate of support is, first is access to the fund, low cost fund or affordable fund, so that MFIs can further lend to end borrower on the lower cost. And second is like if we can reduce cost, operational cost, so that the end borrower can be comfortable. So to reduce the cost, technology can be a big factor. Many of you may be aware about the Prayas scheme of SIDBI. So we started it around 2 years back. So there are around 35 partner institutions. Most of them are mainly MFIs, then NBFCs are there. So this scheme we started is the end-to-end digital. Like MFIs or our partner institutions, they are basically sourcing the applications, because the Prayas we started, okay, it's somewhere in fact MFIs are also finding tough, okay, beyond a certain limit they are not very much comfortable to fund to the end borrowers through. So that's why in fact they are also losing some of their customers which are there with them with long time. So the Prayas scheme we started around 2 years back, and definitely good portfolio has been created during this short time. We have catered to around more than some around 2.5 lakh, around 2.5 lakh customers, and the portfolio outstanding somewhere is 2,700 crores and 5,000 crores we have already sanctioned and disbursed under the scheme. So because this is end-to-end digital, in fact it was said earlier that SIDBI generally do the large, either we do the refinance or we are doing the large loans and all. But through this scheme, the average ticket size is around 1 lakh. In fact, somewhere less than 1 lakh. The loans are directly in the books of SIDBI. MFIs are also getting like good support in the form that they are basically earning fee-based income. Because SIDBI is providing fund at low cost, somewhere around 11-12%, and then MFIs are having their margin because they are like sourcing the application, making recovery efforts also. So technology, I want to say, it can play definitely a big role in cost cutting. Second, then third, in fact, we discussed about the financial inclusion, sustainability, and technology also. Then somewhere, whatever the challenges are there, that is to be addressed. So challenges, I would say that besides the policy level challenges, capacity building is like a big requirement. So capacity building not only of the borrowers, not only of the stakeholders, but the entire ecosystem. Like end borrowers have to be definitely, they have to be guided well, like Mr. Ghosh also mentioned about this capacity building in his first session. So end borrower has to be guided well, okay, whatever the fund you are receiving from MFI or from the lender, so that should be properly utilized in income generative activities so that they can earn income and they can grow also. Second thing is that the lender or our staff members should also be provided proper training. So it was earlier discussed in the first session. And third is for the borrowers, in fact, not only the training for the skilling, in fact, I would say that skilling, financial literacy as well as the soft skill is also very important. And marketing plays a big role because the end borrower, we have a stall outside of the VLEAD program I have seen, so they are really making good items. So this VLEAD, in fact, now we are doing in 6 states. So the challenge in the first state, like we did in Odisha, so challenge we find out, okay, they are manufacturing items, they are manufacturing very good products. So we skilled them, we guided them, we trained them. Their EDP programs we did so that how the entrepreneurship culture can be inculcated in them. But they were finding tough to sell their products. So the marketing part is very important. Marketing has they have to be trained in the marketing tactics. So, like VLEAD, we are doing the capacity building in all these ways. So similarly, I feel that the MFI borrowers, because it's a huge number, so somewhere some programs has to be run. They have to be their capacity has to be built for EDP as well as the marketing as well as the soft skills and skilling also. Through, in fact, VLEAD program, now we are covering around 50,000 beneficiaries. And I would say it's a very good program because out of 50,000, we are targeting at least 44,000 should become entrepreneur. And the results are very good. In fact, till now we have completed program in Odisha with OSAFI, and with AMFI we have almost completed this West Bengal program. So there we created around 18,000 borrowers, and credit linkage to the tune of around 71 crore has already been disbursed. So till date it's very successful program. So that's why we scaled up in 6 states with Sa-Dhan, Kasafi, OSAFI and AMFI. So these are, like, I will stop here. I think we are already, the session is already going late. So in conclusion, I would say that, okay, all the stakeholders, regulators, as well as the MFIs, as the lenders and supporters like SIDBI, NABARD, etc., we have to sit together, we have to finalize, devise some guidelines, some innovations, some technology upgradation to boost the sector's growth. Thank you.
Thank you, sir. Before we move to the next speaker, we would like to welcome Shri Sudhir Sinha, CEO Upma, to our event. Thank you for gracing us, sir. And also to bank dignitaries who've joined us from IDBI, SBI, Shriram Finance, MFIN, Canara Bank, PNB, and IDFC First. Welcome to this event. We now call upon our next speaker, Shri Partho Pratim Sengupta, MD and CEO, Bandhan Bank.
Good morning and a very happy new year to you all. So it gives me immense pleasure now being the head of Bandhan Bank, which is a leading institution in promoting microfinance across the country and especially in this part of the geography. And today's 9th Eastern India Microfinance Summit 2025, where we are deliberating on the various issues related to microfinance and especially the challenges. So I've been asked to say something on the topic need for policy support and strategic guidance for the microfinance sector. So it has got 2 parts, the policy support and the strategic guidance. I think the recent developments that have taken place and that we have witnessed in this microfinance sector is something which was going to happen. It was well indicated. Some indications were very clear, at least 1-2 years back also. And post-COVID, I can say the things have happened rather rapidly, and ultimately has gone to some situations where regulator also have to step in and take some steps. We are all in this lending business, and let us first acknowledge, as has been told in the first session also by many speakers, Without microfinance, inclusive financial growth cannot happen in this country. So microfinance is an essential part of the total financial system of the country. It needs to be promoted, but it needs to be well controlled. The thing is that let us first of all see that what are the challenges are there. So I was also hearing some of the speakers. I have got some different views on this. The first thing is that let us acknowledge and accept the problems. Unless we acknowledge the problems, we will not be able to find solutions. The thing is that we try to always give some reasons when problems emerge, but that will not give the solutions. So first and foremost thing is that the problems need to be acknowledged. And this acknowledgement should come from the SROs or the self-regulatory organizations. If the SROs acknowledge the problems first, it will be resolved also very fast. If we look at the financial debacles of many history, including the fall of banks, especially during 2008, when many Lehman Brothers, Washington Mutual, they all fell. So one of the reasons was that these institutions, the board, even on the last stages, were not ready to accept what are the lacuna or what were the gaps in the system or in their own organization. So my first request is to the SRO is that please acknowledge the gap. Let us not say that media is creating a lot of hypes in this sector. Media will always say what they are seeing. And our duty is that we have to acknowledge those things and we have to find out solutions. Today's economic times have also stated something, we all know, that what are the reasons for the microfinances challenges that we are facing. Definitely, I would say in some of the areas, the scheme has been made a little bit Ponzi, which need to be avoided at all costs. We have all seen the fall of many of the chit funds and other financial institutions. They crumble only when the things become Ponzi. And it is the responsibility of all lenders to work together to have a proper self-regulation so that the schemes are sustainable and the schemes are really come to the benefit of the people. So let us not talk on what is the ROA and what is the ROE. A small borrower is hardly bothered what is the ROE of an institution or what is the ROA of the institution. They are bothered with the interest rates. And if we have a strong self-regulation, then the regulator will also not interfere. It is only when our self-regulation fails, the regulator interferes. Some of the things which because after heading a commercial bank and that too with a universal license, I find it real challenging to put, or I would say to lend in this segment. While Bandhan is, I would say, is one of the pioneers in this segment, in this lending, and is still continuing, and we are still continuing in this segment because we know that if we really want the economic growth of the country, if we really want an inclusive financial growth, we have to support this segment. But the segment needs a lot of self-correction. The first thing is that when we studied our own schemes or our own lending, I found that 75% of the borrowers who have defaulted have taken 3 to 4 loans within 5 to 6 months after their first loan they have taken. The question is that why we lenders have financed the second, third and the fourth loan without ascertaining the credit worthiness of the borrower. It is our self-regulation. We have to do it. I feel that a borrower must be tested for a year or at least 9 months to say before he is eligible for a second loan. His creditworthiness need to be tested. The second important thing is that whether there should be a cap. Yes. You see, RBI guidelines are very clear. It says that 50% of the household income should be only utilized for payment of the loans. So when a first lender assesses the loan and say his income is 1 lakh rupees or maximum 50,000 he can pay, the second lender is also assessing the loan again at 1 lakh, again he is giving. So it is breaching his repayment capacity. The third lender again he comes and again he makes the same assessment and is giving him the loan. So overall the repayment capacity of the borrower gets breached, and that's where the problem starts. Now all these I can say that these are some of the things which we all as a micro lenders need to sit together, deliberate, and find that yes, on the one way the business should be profitable, but on the other side it should be sustainable. It should not create what we are now, the situations what we are facing now. Another important thing is that, again, you see the cost of operations. Definitely, I can say that this is one sector where the cost of operations is high. We need to visit each and every borrower, and definitely the cost of lending also goes high. But again, when RBI has made the interest rate free, we should all work for our proper cost of funds and should not charge borrowers excessive interest rate. You see, if a school today says that we will not mark attendance, it becomes more responsibility on the part of the parents to see that their children goes to the school. Self-regulations become very, very important. The sector needs a proper self-regulation, and then it can approach the regulatory authorities. However, having said this is not, again I am telling you, these are all my views, and I think that this need to be practiced and followed for the improvement of this sector. To the regulator also, we have heard DGM, RBI saying many things. They are definitely supportive of this sector. Government is very much supportive of this sector. The government has also acknowledged that without this sector, the country cannot grow. Economic growth of the country can grow only if we can finance this sector. Some of the things I can always say that if we do good, and we will be measured by the stresses in this sector, if our NPAs, if our SMAs in this sector is substantially reduced, I would again make a request to the regulator, to the RBI, to reduce the risk weight from 125% to 100%. Because 125% is definitely putting a stress on the capitals, and many of the, especially for the banks like us. So if that can be reduced, that is a request to the regulator. The second thing is that totally revamping of the CGFMU scheme. You see the Credit Guarantee Fund for the micro units that is launched by the government is not having many takers now. That is only because the scheme is not designed very correctly. If we make an analysis, what we have made a study at Bandhan, we found that if we manage our portfolio well, I get lesser amount. If my percentage of default is 5%, I get only 42% of my amount in default. And if my percentage of default is 10%, I get 58% of the default. So the scheme is made in such a manner that if you are managing your portfolio well, you will get lesser the amount. It comes as a disincentive rather to the lender. So that would be my request to the government to revamp the CGFMU scheme for them. The third, I can say that whether to good credit borrowers or the borrowers who are having one loan with any of the institutions and paying or well, whether some interest subvention can be extended to these borrowers. I know the interest cost is high. Again, I am telling you, through self-regulation, we need to control the interest cost, but some sort of incentives or some sort of directions from the government should be there to these kind of borrowers, Like we give to the agriculture borrowers as interest subvention, we give even to the SHG and other borrowers. So for that, if these things can be extended to this group of borrowers. So with this, I can say, I can just sum up that one is the self-regulation, which need to be introspected so that whatever the challenges we have faced, it's a lesson for us. Let us resolve it and let this do not emerge again. And on the other side, as I have already said, some of the incentives or some of the policy and strategic help from both from RBI and government would definitely help to improve in this sector. Thank you.
Challenges are what makes life interesting. Overcoming these challenges is what makes life meaningful. Thank you very much, Partho sir, for your candid thoughts and encouragement. Beg your pardon. Thank you very much, Partho sir, for your candid thoughts and encouragement to accept and overcome these challenges and ultimately move towards a $5 trillion economy. With this, I call upon our next speaker, Shri George John, Executive Director, ESAF Small Finance Bank.
Very good morning, good afternoon, everyone. I think we are already more than an hour, we are running delay. So not taking much time on this. Greetings from the ESAF Small Finance Bank. We are so happy to be a part of West Bengal Association since its inspection in 9 years back. And we as an organization, when we are an NBFC MFI, we started our operations in West Bengal in 2010, opening our first branch in Nalhati, near to the Jharkhand. We were very slow in growing here. Once we became the bank, so we partnered with around 8 BCs or institutions here in West Bengal. And closely 3 lakhs customers we are serving through both in the deposit as well as on the liability and the asset side. Not only microfinance, it's also on the secured lending also. So thank you once again, Association, for inviting us, and I consider a privilege to be a part of this Eastern India Microfinance Summit of 2025. The topics which we was selling on the policy support and strategy guidance, I want to share a few things which came to my mind and on my own experience. The policy support and strategy is critical for microfinance institution, no doubt about it, because that will stabilize the regulatory environment for the MFIs, and it's also incentivize the responsible lending process. And as you all know, that's help us in the financial inclusions and build the economy of India, no doubt about it. So let me share a few thoughts in line with that. What are the policy support or strategic guidance we required to build the institutions or build the microfinance industry. As you know, we are running to a rough time. When we are in the microfinance long back, when we started a microcredit program or micro enterprise program way back in 1995, we didn't see such high and low. It's a flat growth we are doing. And we started with crisis started in late 2000s. Then we have every 4 years we have a crisis. Then it came down to now it's I think every 6 months we have a crisis now. But one good thing is that we overcome it. We are as institutions or industry, we are able to overcome and move on. So that is the resilience we build it up. Mr. Alok was mentioning about some of the data and the way we're working on it. So that's the importance of the SROs are moving in and strengthening the industry. So on some of the suggestions on the policy support and strategy guidance, what I feel is that there should be a MFI specific prudential norms, especially in the risk management, provisioning, and the capital adequacy. We can't put everything in the same, we can't in the same level. Changes should happen there, because my speakers are mentioning that this is a last mile connection, the doorstep business. They are in the field, not at the office level. So if we are doing a specific specialized program, let we also have a specific prudential norms. So that really help the institutions. And on second on the PSLC lending, the banks, like us, we get a credit when if the MFI is less than 500 crores. Why can't you why can't regulators or the for institutional lenders to think about that? Can we make some changes to that? Maybe we can have a some more slab so that we can banks like us can start lending to the MFI sector. And one thing I will request all my partners is that be transparent and trust. While we giving or while you're doing the business, whether it's wholesale lending or not, we need a more transparency. We able to open the book for everything. If one incident happens, that will really break our progress. And we have a recent incident happen in India, that. So that's all have impact on a decision by the board whether to lend on the NBFC or not. So my partners and discuss that, open, be transparent, don't hide anything while we do a due diligence for lending. On the portfolio diversification, that's my third point. 85% should be the qualified asset. Maybe the regulators should think about, can we make it, reduce it to maybe 50, 60 or 65%, so that the rest of 35% or 40%, MFIs can focus on the product diversification, whether it's a secured loan or a MSME loan, something non-microfinance lending. That will really help to portfolio diversification as well as the geography also. Okay, they can move into a new geography and they can start lending on a non-microfinance. So this is the third thing that I want to suggest that the government, the regulators should think about reducing the asset qualifications. Secondly, on the we have facing a issue of the single ID. We are using Aadhaar earlier. Now the policies change. I think one of the reasons because of overlending or people are getting multiple loans or people are getting loans even they are NPA customers because there's not a single ID we can map to everyone. So that's one under challenge we have. So I think there should be some strategical decision from the regulators to see that can we have maybe not single, maybe two minimum we can fix it off so that such missing of this can be avoided. And also in the credit bureau reporting, I think that also should be standardized a little more better so that we should not miss out. Sometimes the data comes in such a manner that we don't know whether it is secured or unsecured. Because on the guardrail 2 spoke about unsecured retail lending has to be considered for the forward calculation. But I don't know how many of the institutions are finding easy to manage that. And on the fifth of my items which I want to share is that for the small and the medium MFIs, I think there should be a joint effort. Maybe a state like West Bengal. It's very active association we have. Or at the institutional level like NABARD or SIDBI can think about that, supporting the small MFIs in adopting advanced technology. We as a nation we have a JAM, we have Janta and Aadhaar and mobile, and the data are very cheap here now, so we can utilize those things. But small MFIs, they start with paper and pen. That has changed. They should start with a technology advancement. Maybe they can't invest so much amount that, but institutional lenders like SIDBI or NABARD or maybe SR also can take initiative to help this small MFIs to build their capabilities in that life. I'm not taking much time because time is already short up. I want to share two more things. One is on the unregulated entities. There are discussions happen at the regulators level to manage that, but that should be managed far better. One of the reasons the microfinance sector is facing the issue is because of the overlending from the unregulated entities. So that should be one areas a guidance should be there from the regulators to manage that. I don't know whether I am saying right or not because the market stability is very much required, especially there should be a framework or a SRO's directions or maybe we should be as we have from 4 lender we are coming down to 3 lender. Can we have something like that on a geographical location also? Like regulatory entities, X number of regulatory entities can work in a district. So that can be debated also. But if you want the industry to grow, I think as some of the speakers mentioned about innovations, I think I am in this microfinance industry since 1995. I don't see there's any innovation happen at the field level. The technologies came, we use in Jantan, Aadhaar, digital or e-assign, e-Aadhaar. We are using a lot of data from the Equifax, IMARC. But are we doing a really innovation happen in that? It's not happening much. So that's the area. I think it's 30 years now we are in the microfinance segment, and I think it's time to rethink about the innovations, what we can do. We can't do it on pan India, maybe on a state level, local level, maybe you think about that, so that the industry has to grow. Everyone is agreeing here that microfinance has helped the nation, almost 3% to the GDP, 8.8 lakhs households can be, supported, 4.5 lakh crore is outstanding. So it's big numbers are there. But can we think about something to stabilize this industry or this program, microfinance program, so that can we decide that maybe a strategy or a policy that in a district, this number of lenders will be there. Okay, something like that. I know this is debatable, I don't have an answer to that, but let me share some of these thoughts with you. And one of the things we should really focus on using the data for decision making, not just the credit bureau data. I think we should get more data at the field level to see that the credit decisions are happening in a better manner. So these are some of the suggestions I'll share with that. Surely microfinance has to go to stay here. Where even more banks, more MFIs or more SFBs will be a part of this one. But let me tell you that we all grown from the NGO to MFI, MFI to a bank. We know the pain of transformations. But the microfinance which have a large impact in this country, and I think it's our responsibility to stabilize this. So we may have to adopt it. Maybe there will be some pains will happen. Suppose we decide to have maybe 10 institutions in a district or 12 districts. No, the others has to move out or others to merge. Something like to look into it. Okay, so that why we are suggesting this thing that we need industries to grow, so that the country will get benefited, and every 6 months of these problems can be avoided, and we can have a better better environment for a mutual growth. Thank you, and once again I want to thank the association for giving the opportunity, and everyone, and because I closely watch these institutions. One of the states have very active association is West Bengal, then in UP. So I'm so happy that we're able to work along with them. And thank you once again. And let's build these institutions, build the industry, more inclusive growth, and with more support from all the partners. Thank you once again.
Thank you, sir. Now I would like to call upon Shri Manoj Rambiar, MD, Arohan Financial Services.
I can't say good afternoon. It's twilight zone between morning and afternoon, so I guess I'll say both good morning and good afternoon. First of all, congratulations to AMFI for the 9th edition of the summit. I think, as somebody has mentioned, nobody has been as dedicated and as disciplined in terms of holding it. And while it's a regional event, I can certainly see a lot of people from all over the country being here. It's a expected event. Somebody has also mentioned that you have employees, REs, lenders, investors, media as well. And as Alokji mentioned, for about 2.5–3% of the banking assets, the attention that we get is absolutely disproportionate. And what I'm going to do, instead of you seeing my mugshot there, which you can see here, I'll show you a few slides. Because having spent about 15 years in the industry, I believe that this is one of the most misunderstood and the highest level of misconceptions which are there in the industry. And unknowingly, what people who do not understand the industry are doing is exactly opposite of what the government is trying to do, which is make regulated, affordable finance available to the bottom of the pyramid. So anybody who doesn't understand and says things or does things which essentially are in the opposite direction are actually increasing the intensity of the effort of denying that credit. Just bear with me while I take you through a few slides. This is from the RBI report just published about a month back, and it talks about a financial inclusion index which the RBI launched about 5 years back. And as you can see, there's been a fair bit of progress from 43.4 to about 62.2%. Now, what this index essentially tells you is across parameters on access, usage, and quality, how has the financial inclusion services improved to the targeted segment. Now, if you read that line on the top, it still says while access to finance is improved, 31% of credit, especially at the bottom of the pyramid, is still sourced from informal lenders. And we will learn more about what informal lenders is when we go forward. Most speakers have spoken about the size and the outreach of the industry, SHG, JLG. That's the kind of outstanding which is there in the sector today, 4.2 lakh crores on the JLG side and roughly about 2.58 lakh crores on the SHG side. As you know, the sector is defined as lending to a family with less than 3 lakh income. I think I've overestimated the population there. It's probably still 1.41 billion, but the key part there is about only 30% of the potential credit demand is actually being serviced by regulated institutions, right? And as you know, with 8 crore borrowers, you're talking about almost 32 crore lives being impacted. More importantly, with 8 crore borrowers, even if 50% extra employment is generated in a country which today is struggling for employment, 32 crore people essentially could get access to some sort of work with the microcredit which is offered by both the SHG and the and the JLG groups. As you know, there are different types of institutions. People have spoken about RBI regulated ones, for-profit, NBFC, MFI, small finance banks, universal banks. You also have the not-for-profit sector where you have societies, trusts, chit funds, whole host of other entities. But this is the final picture when you look at the numbers. Let me address something else which I did hear some of my fellow panelists also talk about, and this is the most misunderstood concept in microfinance, which is interest rates. And if you look at lending, you have both secured and unsecured. Needless to add, secured is far more safer given the fact that you have access to some collateral which you can then salvage if the customer goes delinquent. But in unsecured loans, there is pretty much nothing that you can do except go repeatedly to the customer, follow up, try some legal letters just to shake up the family, but otherwise there is nothing else that you can do. Now, the first misconception in the industry, which is a loan of 24% interest, the typical belief is that you charge 24 rupees for a loan of 100 rupees for 1 year. The actual truth is you charge 13.5 rupees. And why is that? Because 24% is quoted on a reducing balance basis. It is not 24% across the tenure of the loan. As you can see there, the principal goes down with every payment that you make, and the equated monthly installment, initially it is more of interest, and towards the end it is more of principal. Right? So this is the first misconception, that it is not 24%, it is 13.5%. And why do we quote 24%? Because the RBI says you have to quote reducing balance. But does everybody else in the financial services sector quote reducing balance? No. And I'll tell you some of the examples which are there on the right side. Fintech lenders, roughly about 50% is the interest which is charged. Credit cards. Most banks, if you read the newspapers of late, have increased their rates from 3.5% to 3.75%. All of us believe 3.75 is a very, very reasonable rate of interest. But the actual annual reducing balance rate at 3.75 is 90%, 90. Margin money, if you have an ICICI Direct facility where you trade on shares, if you need some money for a short term, with the security of the shares, they will give you money at 2% per month, which is 48%. And here we have microfinance quoting 24% reducing balance, but actually the interest being charged is just 13.5 rupees for a loan of 100 rupees. So what I'm trying to portray here is that when you compare, you have to compare apples and apples. You can't compare apples and oranges. Right? So somebody quotes per month, flat. Somebody is forced to quote reducing balance for a whole year, and that is the reason why there is so much of misunderstanding. The second misconception, And a lot of people, including people in the regulator, I find Bagada Sahib is probably left, but a lot of people, even the regulator, ask us that how can a customer borrow money from you at 24% and still manage? Very simple. The concept here is one of inventory turnover. A customer buys 100 rupees worth of vegetables in the morning and tries to sell it maybe by 110 rupees by evening. It is 10% per day. Even if she has a wonderful work-life balance and has a Saturday, Sunday off, which she doesn't, but let's assume she takes Saturday, Sunday off, there are about 250 working days, she makes 2,500%. Now from that 2,500%, if she is paying us 24%, there is a big issue. So what is the other alternative? She goes to the local Sahukar. Today the running rates are 5% flat per month with security, which is either gold or land papers, and 10% flat per month if it is unsecured. 10% flat per month is 10 into 12 into 2, which is 240%. So on one hand, you are beating up an industry which is charging 24%, and on the other hand, the other option available to the customer is 240%. So that's what I tried to explain earlier by saying that anybody who doesn't understand the sector properly and makes comments about the return, the usurious rates. I have a slide on usurious rates. We've asked a lot of people to define usurious rates, there is no answer. It is contextual. That's the answer that we've got. The third misconception, interest rates should go down. Of course, interest rates should go down. But then RBI also has to reduce repo rate. Repo rate has gone up. It has not gone down. Even in the last monetary policy, the rates have not gone down. Now, let me handle one other misconception, which is at 26%, at 25%, the customer pays an EMI of 950 rupees. At 24%, she pays 946 for a loan of 10,000 rupees for 1 year. And at 23%, she pays 941. Which means for every percent reduction, she is paying 4 rupees lesser. Is that really the issue? The issue is access. Because if there is no access to finance, she has to go to the Sahukar at 240%. Please don't misunderstand me. I am not standing here to justify higher rates of interest. I am here to justify appropriate rates of interest for the right lending that we need to do to the segment that we operate in. And why I say this is because, like Alokji said, if you look at the last 10-year history in terms of returns made by investors in the sector, it is less than 5%. All of us here are people who subscribe to mutual funds, probably have some direct shares that we invest in. Would you invest in a company which gives you less than 5%? 5% is inflation, which essentially means that it is 0%. So that's the third misconception. Why does microfinance companies charge anywhere from 22 to 26%? As you can see, these are the elements that they need to address. One is cost of funds, which is the cost of raw material, and we borrow that from some of the bankers sitting here in this room. Second is operating expense, and I think our earlier panelists spoke about operating expenses. Of course, it has to come down. We have a company, we have the largest NBFC MFI in the country, which has an OPEX of less than 5%. At that scale of 25,000 crores, you can bring down the OPEX to less than 5%. But if you have 5,000 crores or 7,500 crores with the IT, with the people, with the doorstep service, with the increase in rentals and HR, and by the way, OPEX is something that we have the least control on. Because all employees would like to be appraised, would like to get increments every year. Every landlord would want his rent to go up every year, irrespective of whether you are in COVID or whether you are not. So there is very little control on that. That's about 6 to 7%. Credit risk premium, very interesting, which is in an unsecured business until pre-demonetization, we were working on a credit cost of less than 1%. Today, this year, this particular year, 24-25 financial year, it will be anywhere from 4 to 5% credit cost, because it is unsecured Of course, there are issues in the sector. I'm not running away from the fact that we do not have lender discipline, we do not have issues with customer discipline and employee discipline. Fourth, liquidity risk premium. What is liquidity risk premium? That if you're an NBFC, you don't have access to customer deposits. So you need to keep some money. If suddenly some event were to happen and then borrowings go down, you cannot default on the loans that you've already taken, which incidentally happened during COVID. Our regulator announced a 3+3 moratorium, but our lenders did not give us moratorium. So how do we pay them if we cannot collect from the customer? Oh, that you have to manage. So to manage that, we need to keep liquidity risk premium. Last but not the least, return to shareholders. At 4% ROA, if you are 4 times leverage, it is 16%. Even Malegaon committee report, the report which sort of defined NBFC MFI in 2011, spoke about at least a 15% return in this social business. So at 4%, you make 16%. And this is the reason why any NBFC MFI you will see operates between the 22 to 26% kind of range because of these elements in cost. And again, as I'm saying, 24% doesn't mean 24 rupees, it means 13.5 rupees. In fact, we should actually quote our interest rates flat per month like credit cards. So it will be 1% per month. Oh, 1% per month is fine. But 24% reducing balance per year is not acceptable. Some pointers on the cost elements. Small size transactions, right? You're talking about 1,000, 1,500, 2,000 rupee kind of monthly transactions. Unsecured credit in a rural kind of setting. And you can imagine what happens if a customer doesn't pay. Credit costs are dependent on the credit bureau quality or data that we get. Do you know, as an industry, NBFC MFI submit data on a daily basis. Banks have been submitting it with resistance on a monthly basis. And now the RBI has changed the rules to say you have to submit fortnightly basis. So essentially a customer, if it was 1 month interval, can float 5-6 applications, get 2-3 loans, right? And then be under the radar because the next report will come only after a month. Accessibility here is more important than the cost because the cost per percentage changes by hardly 4 rupees. Unsecured lending. Climate change is a reality every year now across the portfolio in India. Either Odisha or Chennai or Kerala or Assam or Bihar or even West Bengal gets impacted by floods, cyclones. Who pays for that? Customer says she cannot pay, she wants a deferment. Who pays for that extra carrying cost? We. KYC issues. The industry was very solid and we took a momentous decision in 2015 to shift to Aadhaar as the sole KYC document because all the other documents essentially are not authentic. But unfortunately in 2017 with the privacy ruling from the Supreme Court, we had to stop that. And from then onwards, it's been one KYC after the other, none of which get any reliability. We have customers who have 4 to 5 voters ID cards in their pocket. Right? I'm sure most of you fly, you would have seen in the hospitality or the lounges where people give one credit card and say, "Acha, isse nahi hua, ye try kar lo." So the customer does the same. Right? You try this voters card, it's not giving you a proper, why don't you try this? She has 4 cards in her pocket. And most of it are also legitimate. Usury and usurious rate. Very, very controversial subject. And in my 15 years of being in the industry, I've seen only one place where usurious has been defined. Incidentally, it's in the Andhra Pradesh MFI bill, where it said that interest cannot be more than principal, which means interest cannot be more than 100%. So usury has been defined as interest cannot be more than 100%. So how come 24% has suddenly become usurious? At 24%, we hardly manage to cover our costs. Alternatively, you can define usurious as somebody who makes 25 plus, 30 plus ROE, right? 6-7% ROA. Oh, that's obscene. Now let's look at where the money comes from. Part of the money comes from the bankers who are sitting here as debt, but where does the original mool money come from? Equity, right? Which is people like you in case the company is listed. my friend Sada, who's going to speak, his company is listed in the stock exchange, right? You would obviously invest in his company only if the shares give a decent return. And what is that return? If on debt you are paying about 10, 11%, wouldn't an equity investor expect double of that? 50% more than that? Now, the fourth misconception, investors and return are terms which are hated, we found, right? Oh, you're working for a foreign investor. Fine, let's get money from Indian investors. You know what is the return expectation of Indian investors? 30% plus. यहाँ 15% नहीं हो रहा है तो उनको 30% कहाँ से देंगे? So there comes the foreign investors, and then the criticism for the sector is that Indian women are paying for foreign investor return. So what do? We stop taking money. So the misconception again here is that if you are an investor and if you're putting money, which you have raised by the way from other investors, right, you would expect at least a 15 to 20% return over a 5 to 7 year period. And this sector every 2 to 3 years has an event which takes away the returns you made in the previous 2 years. And obviously nobody can time the market, so anybody who invests at the end of the day, this is, so as I said, foreign investors, Indian investors, this sector needs now at 30% penetration, if we assume that the sector should double, so that 80 plus 80, 160 million women get the benefit, you need another 35,000 crores as primary equity, which is about $4 billion. Now, how will that money come in if there is no sight, forget about guarantee of interest or return? So key takeaways before I end, financial inclusion is becoming better, but 31% of loans in the rural sector are still coming from informal sources at 240% rates of interest. Penetration level is still just hardly 30%. Yeah, sure. All the other segments, and I can debate with anybody on this, all the other products that we've spoken about have far higher interest rates than what we charge. But we get beaten up and they don't, because they quote 3.75% per month and we quote 24% reducing balance per year. Daily inventory turnover, that's the secret in microfinance as to how a customer is able to pay. 13.5 rupees is what interest the customer pays for a loan at 24% for 100 rupees for 1 year. 1 rupee, 1% interest is just 4 rupees. That's not the key point. The point is about accessibility. And as I said, 95% women customers of the 8 crore borrowers that we are talking about, and of that 95% are women. Which other sector can actually claim that you lend money with 4.2 lakh crores at these kind of rates of interest, boasting of a collection efficiency of anywhere 98% plus, or 99 it used to be earlier, and do social good in the process and grow at 25% per year? I'll rest my case here. I hope the last 10 minutes gave you some insight into a practitioner's reality on what the sector is and the misconceptions and the misgivings which are there in the sector which cause these issues for us. So I hope the media people sitting here, and I can see some of them, the bankers, the investors, the regulators, all of you have a slightly better perspective after this session. Thank you.
Thank you, Manoj sir, for your insights on making regulated affordable finance available to the bottommost. Our next speaker, Shri Sadaf Saeed, MD, Muthoot Finance.
Dignitaries on the dais, dignitaries of the dais, stalwarts of the industry, Ghosh, Maity sir, a lot of other dignitaries who are in the audience. Very good afternoon and a very happy new year. I think the good part of being a last speaker is that all the topics are covered, so my job is relatively easy. But I must say, Manoj, a great presentation. And I resonate with every word that you say and totally empathize with it. And I think a lot of the people in the room will also agree with those. I think some of the things which I can add to what Manoj said, this is the industry, microfinance industry, which has been following the APR calculation of interest rates for a very long time, more than a decade, and it's been disclosing completely transparently. The key fact sheet that has been implemented now for many of the regulator has been implemented in microfinance for almost 4 years. So I think to a great extent, microfinance sometimes does not get the credit for being transparent the way it is. But having said that, I'll come back to the topic. The topic that has been given to us is policy support and strategic guidance. I think before I come to the specific points that I have outlined here in my small and brief presentation, is that the industry has been tremendously resilient. It has seen a lot of challenges, and Manoj has already articulated very well how difficult it is to run a microfinance business. We have seen challenges, and every time there is a challenge, there is an innovation and there is an improvement. The first challenge, which was at a very large scale, which actually shook the existence of microfinance, was the Andhra Pradesh crisis. And out of that, a lot of MFIs came out. And one of the things, a great learning came out, that everybody has to diversify its portfolio. And if you can see today, most of the companies have well-diversified portfolio. Nobody is a single state player anymore, unless when you start very early, then you might be a single state player, but largely everybody is diversified. The second crisis after that came during demonetization. There was a massive challenge because the currency was out of circulation and we had to innovate and disperse, but there was no currency available. Most of the people immediately kind of migrated to digital disbursement. Today, almost 100% of the disbursement in microfinance happened digitally. And this was not possible because before demonetization, if you look at maybe maximum 10% of the disbursements were happening digitally, and it was conceived to be very difficult, but it was possible. A good amount of credit goes to the government for creating the infrastructure, the digital infrastructure, Jan Dhan, Aadhaar and mobile. The Jan Dhan account were very, very important for us to go out and lend to the customers in a digital format. So that is one thing that has happened. After that also, we have seen COVID. COVID was a massive crisis. Imagine an industry which has 100% unsecured lending portfolio, and in an environment where you are meeting a customer prior to COVID on a weekly basis, and you are not supposed to go to a customer for 6-month period of time. You have a moratorium offered for 6 months. And you cannot imagine, if you ask me before COVID, that if there is a situation where you can't meet the customer for 6 months, what would be your portfolio quality? I would say that I don't think so we will be able to survive. But this industry showed resilience. This industry shows perseverance, and we were able to not only survive, but we were able to grow better than before. I think great credit goes to all the people who are involved in this industry. I think a lot more credit to the borrower. The credit worthiness of the borrower is proven in crisis. You cannot imagine a bigger stress test than a COVID-like situation, where you're not only on the availability of the finance, the access to the customers, also the livelihood of the customer was affected, but still customer came out and paid. Definitely initially there were delinquencies, but in the first year itself, by March, almost 96-94% customers were paying on time. And the second time when the COVID happened, the next year it was even better, the recovery was even faster. So there is no doubt the industry is massively resilient, and the customer that we are serving is super resilient, and she is responsible for her credit, and she has been paying well. Having said that, yes, there are instances where we need to look inwards, and I am totally of the opinion that sometimes criticism is good, and it gives you a perspective which you might not have. Of course, I think sometimes I don't blame the media, but it's always a catchy headline. Even if you look at today's headline, in that headline itself, in that article itself, you have a table which shows that 95% of our borrowers are less than 4 loan, but the headline talks about the 6% of the borrowers. So be that as it may, and as Ghosh said, we will be criticized, and we should be better than that, and we should prove that. And one of the other points that Ghosh said, I think that is where our strategy has to focus on. I think gone are the days where we can only focus on finding a new to credit customer and just lend to them based on the goodwill of the customer. There has to be an element of credit underwriting. And I'm speaking here with responsibility. I've spent a lot of time in underwriting. I started my career in risk management. I worked with banks as a risk head, and I've done all my life risk management, nothing else. So 25 years of work, and all along in unsecured segment. So I can tell you there is enough ways to underwrite a customers, even with the surrogate. If you don't have a formal set of incomes, formal data points, there is a way of underwriting it, and that is what we have to focus. The growth has to be credit underwriting driven. That would be the sustainable growth. I think if we only rely on the group liability is a great concept, and I think it will continue for some time, maybe a very long time. But I think the joint liability, because of the size of the loans and the size of the EMIs, has gone a little bit weaker. Earlier, when we used to start with a 4,000 rupee loan, 5,000 rupee loan, or a 10,000 rupee loan, the installment was say a 250 rupees weekly, and there was a 20-member group, and if the 20 member, if 2 people fall back, the rest of the 18 members have to pool in 250 rupees weekly. Then if you divide that 500 rupees weekly. So if you divide that 500 by 18 members, that would be still an affordable sum for people to pool in for some time. But now the installment have gone bigger. There are monthly models in place. The installment is around 1,500 to 2,000 rupees monthly. And the group sizes have gone smaller. If there are 10 people, and out of 10 people, 2 people default, that 3,000 rupees to be pooled in by 8 people is a difficult task. They might still pool in for 1 month or 2 months, but they will not pool in for the 24 period of time. That is the reality that we have to accept and agree. That is why I think it is important to underwrite the customer better. When I say underwrite, that is assess the customer's ability to pay. And we talk about artificial intelligence, the AI. The AI in microfinance is ability and intention. The ability of the customer to pay and the intention of the customer to pay. That has to be judged. And that can only be judged if we do an objective underwriting at the grassroots level and train our field staff to ask the right questions, and then only we will be able to. If we just form a group and continue to lend based on the good faith, there would be events, and events like what we are facing today might create a lot of kind of credit costs. So if we underwrite better, there is, of course, would be a better quality of portfolio. That is what we have to focus on. So customer selection becomes a very important criteria, and that is what we should look at from a strategic guidance point of view. The second point is there is enough data points today available. So there is a need of active use of technology. I think back in the days, there was no credit bureau before the Andhra crisis happened. There was no data points as to judge the credit worthiness of the customers or repayment habit of the customers. But now we have one of the most robust credit bureau system in the lending industry, where most of the players are pouring in data almost on a daily basis. It cannot be more accurate than that. If you have that data, that's a rich depository of data, almost like 8 crore loan accounts which are there, and you have a repayment track of that. If I'm not wrong, it's more than that. I think around 15 crore loan accounts. And based on that, definitely there could be a good amount of scorecard, a good amount of underwriting practice can be built in, and we can judge the repayment behavior of the borrower. That has to be done. And when we do underwriting, we have to be honest to ourselves. When RBI talks about a household level indebtedness, we have to look at the household level. We have to look at the borrower that we are lending the loan, the co-borrower who's the earning member, or any other earning member at the household, and look at their liability at a whole household level and their repayment habit also at the whole household level, and based on that we should be lending to the customer. So that's very important. I think the third thing which I would suggest, one of the key things and which everybody is talking about globally and domestically, is the challenge of climate change. We are witnessing across the country, across the world, there have been floods. There was a recent excessive rains and floods in Tamil Nadu. There were rains and floods earlier in West Bengal, also in Odisha. And it has become a kind of a very frequent phenomena. It is important that we build resilience for our customers on that perspective. I think there is a product which is a natural calamity insurance product which is available for the customers, and we have to focus on that to ensure that there is a climate resilient built in for our customers' benefit also, and which will in turn kind of help us also. I think apart from that, some of the strategic and also kind of a policy support that we need. I don't see the RBI representative here, but I'm sure Ajit will pass on our messages. There is a need, a very important need when we talk about diversification, the diversification in assets also. Because right now, NBFC MFI particularly has become a monoline product, and where we have to have 75% of our asset as qualifying asset, and that is theoretical. If you look at the requirement, most of the large companies are governed by liquidity coverage ratio. We have to maintain some liquidity in our balance sheet. We have to maintain liquidity for operation reason also, Manoj articulated. So practically it becomes like almost 90% of our asset is only one product, which is highly risky for any entity. There should be room for diversification. There should be room for, yeah, sure, I'll be finishing very soon. So there should be room for the ability to innovate and graduate that product. The same customers we have been servicing, and whole banking industry is built on that, retaining your customers and progressing with your customers, servicing more and giving more products. So there should be a ability to offer more products to our customers. We see the same segment of customers are having loans with other entities, and fintechs are coming in that space and they are offering products. There is a micro lab product which is also being offered to same set of customers. But it should be like allowed for microfinance companies to do 75-25 or maybe more 60-40 in terms of microfinance asset and other assets. So that is one part. The second aspect from the policy side is there is no other industry which is so straight-jacketed. In terms of our customer segment is very, very strictly defined, 3 lakh rupees of income and below. Our lending rates are very highly regulated. Our areas where we lend, what we can lend, what FOIR we can lend, the credit policy is completely kind of. The only thing that we need right now is to have a room in terms of selecting the customers. Right now there is 3 lakh rupee income category which has been fixed for microfinance lending. There should be a allowance of out of the 75% qualifying asset, 50% should be 3 lakh and below income. I get that point that we need to reach to the segment which is unserved, but there should be allowance of at least 25 up to 5 lakh rupees of income. We can focus on those segment of customers, because a lot of the customer from our segment are growing and becoming a higher income customer, which we are forced to let go of. So if as a lending business, any lending business, if you let go of your good customer and you keep focusing on the newer customers, your delinquencies are bound to increase. So there should be a room that up to 3 lakh rupees of income, 50% of your asset, up to 5 lakh rupees of income, additional 25% of assets, something like that. I think other points many of the previous speakers have also highlighted. From a policy support side, we definitely need a uniform ID, which is Aadhaar in our case. If it is there, definitely it'll strengthen the dedupe, and it will also help us to cut down on overlending and over-indebtedness of the customer, identify customer better. The most important and the most sensitive subject are interest rate. If the interest rate for MFI has to come down, definitely there is a need for our cost of borrowing also to come down. Unfortunately, we have not seen that happening. Even when during COVID time, when the rates were cut, the risk premiums were increased, and eventually we were getting the borrowing at the same rate. Only it is possible if there is some sort of a dedicated refinance facility which is made available for microfinance entity on the lines of what is available for housing finance company by NHB. Something like that, if it is made available, we will be able to get funds at a cheaper rate and pass a better rate to our borrower. Having said that, as Muthoot Microfinance, as CEO of that company, we have made our effort to cut rates. We have cut 115 bips interest rates. We are now lending at 22.75%. But definitely, as Manoj said, the cost metrics and the profitability metrics and the credit cost and operating cost does not have very large room for us to bring those rates down to like below 20%. That will be very, very difficult. It is only possible if we get some sort of a cheaper source of finance, and whatever cost of fund we have been able to bring down is because we have been able to diversify our source of from outside the banking system. We have been able to do ECBs at a cheaper rate. We have been able to do NCDs at a cheaper rate. I think unless that also comes into the mix, it will be difficult for the industry to bring down the rates. I think I'll stop here, and I would once again thank West Bengal Association for calling me for this session, and congratulations for a wonderful gathering and a wonderful association. Thank you very much.
Thank you very much, dear esteemed speakers, for sharing your thought-provoking word with us. Now I would request Mrs. Rohima Khatun to come over, MD NOSKK, and Mrs. Diksha Shaw to come on the stage to deliver our token of appreciation to the speakers.
For the next event of the day, I request all the board members of AMFI West Bengal to kindly come in front of the stage. All the board members of AMFI West Bengal. We've altered the course of today's proceedings because, as you all know, we are running behind time. So we have kind of shortened the entire schedule so that we can proceed towards the lunch break quicker. All the board members, kindly please join me in front of the stage. All the board members of AMFI West Bengal. The next event of the day is the presentation of the Lifetime Achievement Award, for which I request Shri Chandra Shekhar Ghosh to kindly grace the stage. This award is an appreciation and recognition of Sir's exceptional leadership, vision, and relentless commitment to financial inclusion, which has transformed the lives of millions across India. MFIN Sa-Dhan head also kindly please join us. JG sir, Alok sir. As the founder of Bandhan Bank, He has pioneered innovative solutions in microfinance and banking, empowering the underserved and underbanked communities. His tireless dedication to social and economic upliftment has set new benchmarks in the industry, making him a true catalyst for positive change. This Lifetime Achievement Award honors his invaluable contributions to the financial sector and his unwavering pursuit of a more inclusive and equitable society. Moderators and speakers, kindly come down for a group photo with Aditya Chatterjee. Request him to kindly come in front of the stage for a group photo.
Thank you to all of you, my colleagues, friends, and Guru, all are in here. I am feel grateful to all of you, even this the lifetime achievement. Feeling that I am now retired. Sir, lifetime means I will not come. I will not contact to all of you. I am so much old. I will be like to live in my home only. Is it correct, sir? No.
আপনি বললেন যে আপনি বেশি ব্যস্ত হয়ে গেছেন।
লাইফটাইম দিয়ে দিয়েছেন তো সেই জন্য কি আর আসা যাবে না? So I feel this is my base. I like this industry. I like these activities. I started from these activities, and these people has given the award to me to come to this position to receive the award. All of in the dignitaries who are helping us to come this position. আমি সত্যি গর্বিত, আমি সত্যি আনন্দিত। একটা ছোট্ট অর্গানাইজেশন আজকে আমাকে কোথায় নিয়ে এসেছে সেটার সম্পূর্ণ আমরা বলবো কৃতিত্ব আমাদের কর্মীদের আর আমাদের বড় অফকোর্স এই দুজনেই আমাদেরকে আজকে এই পজিশনে আসতে সহায়তা করেছে। অবশ্যই ব্যাংকার, রেগুলেটর, অল স্টেক হোল্ডার অলসো ইজ এ পার্ট, বাট এই দুইজনের কৃতিত্ব অকল্পনীয় এবং তারা করতে পারে সেটা এখানে আমি বুঝতে পারি। এবং অনেকেই আসে কথা বলে ইন্সপায়ার্ড, সেই জন্য আমি আরেকটা অংশ এখন
জুড়ে দিতে চাই যে আমাদের এই উদ্যোগগুলো যারা আমরা করছি এবং যে কাজগুলো আমরা করছি আমরা যেন নিজেদেরকে দুর্বল মনে না করি, নিজেদেরকে হারিয়ে না ফেলি, শক্ত থাকা নিজের উপর এবং এগিয়ে যাওয়া। আসবে, জয় হবে, আবার ভালো দিন দেখা যাবে, কারণ মেঘের পরে তো সূর্য দেখা যায়, সেটার জন্য অপেক্ষা করা। ধন্যবাদ সবাইকে, সবাই ভালো করছে স্যার।
আজকে এরকম একটা দিনে এটাকে সম্বর্ধনা দিতে পেরে আমরা গর্বিত। চন্দ্রশেখর বাবুকে আমি চিনি ফ্রম 1998। আমাদের ভিলেজ থেকেই উনি এসছেন প্রথম এবং ওখান থেকে শুরু করেছেন মাইক্রোফিন্যান্সে। আমি একজন ভিলেজের প্রতিষ্ঠাতা হিসেবে সেই জন্য গর্বিত। আমি জানতাম, আমার ধারণা ছিল একটা জায়গায় উনি পৌঁছাবেন। ওনার এই যে সাধারণভাবে মানুষের সাথে মেলামেশা করা, এই যে মাটির সাথে যোগ রাখা, এত বড় একটা পজিশনে গিয়ে এটা সকলের নিশ্চয়ই শিক্ষণীয়। প্রত্যেকটা ক্ষেত্রে আমাদের সঙ্গে যোগাযোগ রেখেছে, এমনকি এখনও যখনও ব্যাংকেতে ছিলেন তখনও ফিল্ড লেভেলে কী হচ্ছে সেখানে গিয়ে ডাইরেক্ট মনিটরিং করা, তাদের সঙ্গে মেশা, তাদের সুবিধা অসুবিধা, যার জন্য মাইক্রোফিন্যান্স সেক্টরকে উনি খুব ভালোভাবে প্রথমে শুরুর দিকে যেমন দেখেছেন, ব্যাংকের থেকেও কিন্তু সেইভাবেই দেখেছেন এবং তার অনেক অভিজ্ঞতা সেগুলো হয়েছে যেগুলো শেয়ার করেছেন। যাই হোক, এখন ওখান থেকে মাইক্রোফিন্যান্স সেক্টর থেকে উনি রিটায়ার করেননি, হয়তো বন্ধন ব্যাংক থেকে রিটায়ার করেছে। মাইক্রোফিন্যান্স সেক্টরে উনি আছেন, থাকবেন, চিরকাল থাকবেন, আজীবন। কেমন? তাই ওনাকেও আমরা আমাদের লাইফ টাইম এই বন্ধনের প্রতিষ্ঠাতা মেম্বার হিসেবে লাইফ টাইম হিসেবে রাখা হয়েছে এবং লাইফ টাইম এক্সিকিউটিভ বোর্ডের মেম্বার থাকবে। ধন্যবাদ। আর ভালো থাকুন, সুস্থ থাকুন, আমাদের সেক্টরকে আরও ভালো করুন, আরও অ্যাডভাইস করুন, গর্বিত করুন। থ্যাংক ইউ।
বলা হলো না, একদিন স্যারের অফিসে গেলাম আমরা, আমি স্যার আমরা একটা অ্যাসোসিয়েশন, সেটা হলো মাইক্রো ফাইন্যান্স অ্যাসোসিয়েশন 2006 সালে। এবং বসে স্যার বললো ঠিক আছে করুন, আমার অফিসে জায়গা আর আপনার অফিসে অ্যাড্রেস, ঠিক আছে একটু ভিতরে বলে অ্যাড্রেস দিল আমাদের অফিসে, আর স্যারের অফিসে হলো আমরা মিটিং মাঝে মধ্যে আমাদের অফিসে। এটা হলো তখন রেজিস্টার্ড হয়নি, এটা হলো 2006 সালে এবং এটা আমরা খুব চালিয়েছি। 2010 সালে 2010 যখন এই ক্রাইসিসটা আসে, উই আর মিট এভরি স্যাটারডে এবং প্রত্যেকে ডিসাইড করেছি কি করব এবং কিভাবে এটাকে হ্যান্ডেল করব। প্রত্যেকে ফিল্ডে যেতাম, উই আর ওয়েন্ট দ্য ফিল্ড ইন এভরি উইক and return back what is the situation, how we are, and everyone follow the same decision. It's a very good way. We have been learning that, and that has become 2010 we are registered. So this is an oldest association of microfinance in India, I can say. Thank you. Thank you to all of you.
Dhanyabad sir. Moving on to our next proceeding, we lead Women Entrepreneurship Livelihood Enhancement and Development. It is an intervention which is being implemented by AMFI-West Bengal with the support of SIDB. Under this intervention, women of SHGs and JLGs are being transformed as ME, micro entrepreneurs. Observing the impact created under WeLead project in West Bengal, AMFI has requested SIDB to implement a similar project in Jharkhand while incorporating the learning from West Bengal. AMFI's request has been accepted by SIDB and sanctioned the project for Jharkhand, which will be implemented over a period of 2 years. We invite Shri Ajit Kumar Maity, Shri Kuldeep Maity, Shri Ronendra Chaudhary, Srimati Diksha Shah and Shri Kartik Biswas to kindly come on stage to receive the sanction letter from SIDB. We also request Shri Shourabh Bajpai, DGM SIDB, accompanied by Shri Topomoy Patnaik, AGM SIDB, to kindly hand over the sanction letter.
Really, we are very happy that SIDB has sanctioned a WeLead project for Sarkar. It is a project of 1.44 crore for 2 years. We already been implementing this West Bengal We Lead project that has been very successful. That has already completed 2 years, and this is started very recently, this Jharkhand project. So it is helping to the borrowers of microfinance so that they are promoting their entrepreneurship, development and marketing, etc.